It's about that time, guys. SoFi's earnings are here, and we have to break down everything that you need to know before the earnings come out, which they're coming out literally in less than 48 hours from now. So, guys, we have a lot to cover. Hit the like button. Make sure to subscribe and get up to 15 stocks from Moomoo. Check out this deal, guys. Once you open up your account and fund it with at least $100, you get 5 stocks and you get a $30 cash reward, and fund your account with at least $1,000. You get 10 more stocks, and your uninvested cash for now will earn up to 8.1% APY, which, guys, trust me, I'm telling you, this is the best deal on the market right now. So check out the link down below or go to stocksurfs.com/Moomoo. And with that being said, guys, let's get right into the video. So it's about to get real for SoFi stock as the company is about to report earnings. We're about 48 hours away from the company reporting earnings on the 29th of this month in the morning on Tuesday, right? So this stock has been going berserk. You guys know that. There's no need to go too deep into that. We all know. And we hit a fresh high on Friday morning. We hit $11.36, slightly taking out the highs from Thursday morning where, you guessed it, we ripped like no other. We hit 10.50 Thursday morning. We ran all the way to 11.30 at open that same day. And again, we took out the highs on Friday from Thursday, but then we ended up pulling down a bit. All right, makes sense. We cooled off a little bit, some profit taking, short-term, weak hands getting shaken out, whatever you want to call it. So we pulled down from 11.36 to 10.89, which was a 4% pull down, and then we kind of consolidated for the last couple of hours, including the aftermarket session. So at this point, guys, SoFi is still looking very good on the charts heading into earnings, and we're going into Monday off of a pullback, right? Even though we technically had a green day, we took out the highs from Thursday, we technically did pull down throughout the rest of the day. So at this point, are we going to get buyers to come in around $10.50 to $10.75, $11? I think we might. I think we might at least tomorrow on Monday heading into earnings. And then after the numbers actually come out, it's fair game after that, man. Who knows what's going to happen? This stock is still very volatile, guys. You got to keep that in mind. So now that it's priced to perfection pretty much, anything could happen after earnings. Earnings have to be a grand slam, in my opinion, for this to go up a ton more, considering how much it's already up over the last couple of weeks. I'm not saying that it's going to collapse after earnings, but, you know, could it slip 5-10% on maybe a disappointing report? It could, and you guys have to be ready for that. But who knows? We could also come in with the Grand Slam report and get this thing even higher. We shall see. But we are at a point now where we're cooling off a bit. We're right by the 180 SMA on the 30-minute chart after a little cool off on Friday. Nothing too crazy. And here on the 20-day chart, we're right around the 50 moving average on the 4-hour chart. You guys can see we're well above both moving averages. And on the 3-year chart, you guys know the next main resistance is around 1175, which could be a target that we hit maybe after earnings. If we get a pop after earnings, that's going to be the first target I'm looking at, which is where we hit in July of 2023. Not too long ago, guys, about at this point, like 15 months ago. So the charts are favoring the bulls, no doubt about it. We're pretty much priced to perfection right now heading into earnings, and this company once was an $8 billion company, and now it's an $11.7 billion company. So the market cap has grown immensely over the last couple of weeks. If I zoom in a little bit here, you guys can see $11.7 billion market cap. The beta is a 1.71. It makes sense. It's more volatile than the overall stock market. EPS trailing 12 months is minus 22, so negative 22 cents. That's why there's no PE ratio. They're not profitable on a trailing 12-month basis yet. So we'll see over time how that ends up changing. But again, market cap's 11.7 right now. It was at just a couple weeks ago at $8 billion. So we're going into earnings at almost a $12 billion market cap. And you guys probably know the short interest is decently high. Let me see what Yahoo Finance has it at here, guys. Bear with me. By the way, run those likes up, guys. If you're not hitting that like button yet, I don't know what to tell you. If you're not subscribed yet, what are you waiting for? I think 50% of you guys watch the content, but you're not subscribed. So if that's you, make sure to change that. Hit that subscribe button. So here it looks like the short percentage of float is 17.87%. Short percentage of shares outstanding as of the 15th of October, just under 17%. So pretty much right around the ballpark that I was looking at, or that I was thinking it was at, 15-20% roughly short interest there, which could explain a little bit, in my opinion, the big move that we've seen as of late with the stock going berserk. You know, it went from essentially $7 to almost $12 like that, and it went from $9 to 11 plus very quickly as well. So pretty impressive there. So keep your eyes on that. And for their actual numbers, guys, pay attention here. The estimates for earnings per share based on 14 analysts, the average estimate is 4 cents, the low is 3 cents, the high estimate is 7 cents, with them losing 29 cents a year ago, guys. So year over year, man, a lot of improvement from losing 29 cents last year to now a 4 cent profit, 4 cent EPS on average. That's really good. And revenue, if I come down here, based on 11 analysts, average revenue estimate is $632 million. The low is $626. The high is $641, with them doing $530 million in sales. Revenue, same thing, a year ago, up 19% on average. That's the sales growth projection. So not too bad, guys, not too bad. And for the current year, it looks like they're projected on average $2.45 billion of revenue versus 2.07 from last year. That's 18% growth. Not too bad. I do suspect that will accelerate the growth rate over time, at least over the next couple of years. We shall see. But yeah, guys, that's pretty much everything that I'm looking at in layman's terms, numbers-wise, here on SoFi. And it's crazy how much the company's grown, market cap-wise, the fact that so many people are still shorting it, and that could, potentially open up the perfect storm here heading into earnings. You know, if they crush it, stock goes up, shorts cover, it goes up even more. This could go up more than you and I even think. It's not guaranteed. Obviously, please do your own research, but it is something worth mentioning here. Things are starting to click for SoFi. It's that time, and it's about frickin' time that's happened, guys. I'm excited. I've been in it. You guys know I'm long. My average is $6.80 across 2 accounts, and here we are. We're pushing $11. I'm up around, percentage-wise right now, about 60%. I'll take it. I'll take it, man. I'm loving it. So what do you guys think? Are you ready for SoFi this week? Let me know in the comments. Hit the like button. Do not forget to subscribe. And shout out to everybody that's been joining the Patreon, where I'm building out my real money private portfolio. I'm putting in money every single week. I'm buying stocks. And you guys get to see all the moves I make in that portfolio. Plus, there's a Discord. I post my charts and ideas throughout the week. So if you guys are interested in joining, check out the link down below in the comment section and the description box, or go to StockSurfS.com/Patreon. All of that again, is down below. I appreciate all the support. And with that being said, I'll catch you guys later.